Shri Kailashnath Adhikari ji, Shri Satish Marathe ji, Shri Apte ji, Shri Sabyasachi Goswami ji, friends, ladies and gentlemen, it's a pleasure and honor to be in front of you. I come from I always ask fundamental questions of what is a bank? We take bank as given, and we also take bank as something for which society has to work. It will remain forever, and if it goes down, it's a society's responsibility to make it good. And then again and again and again. So if we ask, does society exist for banks, or does the bank exist for the society? Why we need to ask these fundamental questions is that if you do that, I think Mr. Sabyasachi mentioned about that the banking function will be required, but whether banks will be required or not. If we don't ask that fundamental question, we'll continue to go for answers which may be very elusive. And that's why I ask that question, that what is a bank? If you figure that out, you will get many, many, many answers for the future. Many times, we also try to get our answers of future from the past. We think past is a good guide to the future. But in a modern, fast-changing world, past is certainly not a good guide to the future. So if we try to figure out our problems, in those days, what we would have thought, collectively or individually, that this is how I will solve the problem if I were given a chance. Those things have changed. The world has moved. And world is moving so fast that it's, by the time you think, it would have gone into a different trajectory. So if you cannot anticipate, it will be difficult for you to resolve the issues. We will continue to resolve the past problems which may not remain relevant in the future. For example, around 15 years back, India's telecom density was around 4 phones for 100 people. And we used to be told that if India gets a phone to every home, every individual, then the GDP will increase by 2% now per annum or otherwise, but lots of such articles used to come, and we used to know that it takes 5 years to get a phone, right? And to make it work, you have to keep on bribing the linesman. In fact, yesterday I told some young people that the largest dowry in rural areas used to go to the linesman because he could continue to get bribed all the time to make people's life at least continue. And that changed by nothing else, not because of our hard work, sir. That changed by a single quirk of fate, a single technology called mobile. We didn't have to dig stuff, and it changed. Nobody even predicted. It just happened. The cost came down, the scale happened, and today pretty much 90-95% of people of India are covered. Now that's a great achievement, but it happened not because we worked hard. Of course, we were working hard before also, policy at policy level, every level. But solution came from somewhere else. Not that it increased India's GDP by 2%. That is basically a promise, and that's the promise many current technologies are making, that they will be used by 55% and 69%. And all those are basically predicting future, which is, in a sense, may happen, but broadly may not happen. What is a bank? For me, is a bundle of services. They happen to be provided by the same organization for a variety of reasons, largely of the past. Is it a saving entity where you can put your money? Is it a lending entity where you can borrow money? Is it a guarantor? Is it a entity which provides LCs? Is it an entity which provides you foreign exchange? Is it an entity which provides some or other products? Like, does it sell you insurance? Does it sell you anything else? Probably mutual funds. It is basically an entity which has branches and now, of course, mobile applications and all. But it is providing you bundle of services. And because of the past of the world, the banking system evolved in a particular way. Post World War II, what we call Bretton Woods system came into practice or came into existence, where World Bank and IMF sit at the top, then central bank of every state or every nation state sits there, and then banking system sort of provides all the stuff. So in case the country needs more money, that's given to by the World Bank or IMF, depending on whether country is under stress or not. But for me, that is one way to look at it. And if you think the past is going to be good guide to the future, you may continue. But if we look at it the other way around, that those functions of having foreign exchange may still be required. Those functions of savings may still be required, of lending, borrowing, all that may still be required. But will these entities do it or somebody else do it? Any economy in older world has two legs. One is what I call intermediation leg, other is disintermediation leg. Intermediation is where you put in your money with somebody and they on lend to somebody else. If the person who has been lent money on lend, if he defaults, still your money doesn't go. That is the theory. That is the banking system. And then there is a disintermediary framework where you directly give money to other person as a partner, then it is called equity share. As a lender, then it is called debentures or a fixed deposit or whatever. So there is a intermediary framework, which is a banking system, and there is a disintermediary framework, which is a market system. Over last 30-40 years, especially post nationalization of banks, our country gave more importance to the intermediary framework, the banking system, because banking system also allows somebody who wants to direct credit to create more money and so on and so forth, which market system will not. And that's why there are many reasons why most countries depended on banking system as a primary vehicle for many of the things they wanted to do, including financial inclusion, lending, borrowing, and that became basically a framework saying only if this institution is there, we will be able to do it. At some point in time, around 91, 92, we started liberalizing and a lot of need for credit and other things came in, and the markets also started going up, the asset markets. And it was felt that the markets were going up because of the liberalization, but actually it was going up because the money from banking system was taken fraudulently and put into the market. That is now known as the Harshad Mehta scam. And there, what happened is the scam was at both places. The banking system was also giving money, and the market was using that money for increasing the asset prices. But it was projected willy-nilly, knowingly, unknowingly, that the broking system, the market system is very bad, and banking system is excellent. It's just that this entire framework has been misused by those guys. They need to reform. So the entire India ended up reforming, all the policymakers ended up reforming the stock market completely. A new exchange was set up called NSE. Depositories were set up, clearing corporations were set up. But it was pretended that nothing happened in the banking system at all. And so 1991, what should have been reformed and did not get reformed are now coming to sort of call us, saying, since you didn't do that, now 100 times more is coming back to you. The other issue which was there was that if you lend money and somebody doesn't give you back, what is your remedy? The modern capitalist system works on basically your ability to take back the money. And there we had a new law called SICA, Sikh Industrial Companies Act. Many of you who are young would not even have a memory of it, but it was in operation even 3 years back. And there it ended up ensuring that the lenders, which is banks or NBFCs or anyone else, even the debenture holders, couldn't go back and collect their money. Only we did not reform that portion also. In addition to not reforming banks, we did not reform the way to collect money back by selling assets, by whatever means. The bankruptcy proceedings never happened in India. And that is over last 30, 40 years. And that was basically where we have an issue now in a banking system, that we decided to reform, somebody else saying, I don't have a problem, those guys have. And that happened. Those guys got reformed, they are reasonably good now. But what we did not reform is now coming back to hit us. If you look forward, what will happen? Some flavor you have got today, saying the technology, tsunami is coming and so on and so forth. But what basically is going to bring is the lower cost of transactions to reach out. Lower cost of transactions for providing you unbundled services. And those are the things which are going to basically change the way we think about banking. Tomorrow's banks may not be that important. But if we continue to say that no, the banks have to be there and the entire thing has to be revolved around only banking, then we are going to be doing a disservice to the society. At the same time, there is another issue which has come up, that is basically about the stressed assets. The total lending of commercial banks in India vis-a-vis GDP is close to around 50 to 60%. Out of which, the total stressed asset is somewhere between $100 billion to $150 billion. Compare that to, say, another country called China. China's total banking plus non-banking system put together vis-a-vis their GDP is 300%. From over 50-60%, it's 300% on a base of $15 trillion. So they are close to $50 trillion or 45 to $50 trillion of banking and non-banking assets, and it is believed that large portion of it is actually bad. If it is true, then probably by estimate somewhere between 10 to 20 trillion dollars are bad assets there. We have close to 150 billion dollars. Our problem is not that actually important, but we need to resolve that so that we being a democratic country and so on and so on. Similarly, US. Even US has a very large balance sheet for Fed, for all banks and so on and so forth, post the financial crisis. And what happened? They also depended on the banks. Banks lent up money wherever that was required or where they thought was required. But finally, when they failed, government had to make it good. So how do we ensure that when a bank fails in future, the society doesn't suffer? Society doesn't actually pay up. Because in market systems, the society doesn't pay up if debenture is not paid back. Nobody prints money and gives it. If a stock prices goes down, nobody, of course people may claim that government should give it, but nobody gives it. How is it that only in banking we have to do it? And those are the questions I thought should be part of our reforms process, reform thinking. And since Mr. Marathe has joined recently on the board, I thought these are the questions to ask, saying, have they become so big that we have to continue to sort of save them, even at the cost, a great cost to the society? And if the modern framework allows you to reduce their importance in terms of the transactions they conduct or the scale by allowing more and more what is now known as fintech or otherwise, what will be happening is that today, over the last 40 years, we have created an illusion that even if bank fails, your money is safe. The buyers don't beware in banking. Wherever you want to put money, put it. We will ensure that if that bank goes down, we'll get it merged somewhere and so on and so forth. How do we make, when you buy a refrigerator, you also have to do a little bit research. If it fails, you are also responsible because your money is gone, but not in banking. How do we make the users more responsible? And then only the people working in banks will be more responsible. So I hope I've given you an idea or ideas of what is it that we need to anticipate, how the current framework has come, and there is nothing wrong or right about it. The rest of the world has done it. we were also following it. And those technologies allowed only so much to do. Now, going forward, should we still look back at the past and drive your car on rear view mirror basis? Then you will always have accidents. Or anticipate the future and create policies which ensure that you don't have further accidents. Thank you very much.